Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this technical analysis of the stock market video, we're going to take a look at the S&P 500 on a daily and weekly chart, and then we're going to look at the semiconductors, home builders, and the financials, and then we're going to come back and look at one of my indicators that is waving a warning flag now, and show you what has been the results of that in the past. So stay tuned. All right, let's start off here with the S&P on a daily chart. So this is the low back here in February. We are in the fifth and final intermediate wave of the S&P 500. And this is the current wave count, and it's still a valid wave count until we push above 2286 on the SPX. Now, the wave count changed on the Dow, but it hasn't changed on the S&P 500, at least not yet. So we're counting this as wave 1, 2, 3, 4, and 5 is still valid. It's just if we push above 2286, then wave 3 becomes the shortest wave, the shortest of the motive waves like 1, 3, and 5. And that cannot be by the Elliott wave rules. So right now, this wave count's still holding. All right, that's the picture. Then the S&P was down 4 on Friday. When we look at the weekly chart, you can see it was down 1.45 for the week, and a little doji candle in here, which means it basically opened or closed right about where it opened for the week. And this could turn into an evening star, but we'd need a down candle for next week to make that happen. Right now, it just looks like it's a pause in the action. So that's the picture, and this is the view that we've got right now with intermediate wave 3 peaking out back in May of 2015, intermediate wave 4 bottoming here in February, and then right now we're approaching the highs here in intermediate wave 5. All right, let's take a look at semiconductors. Semiconductors on a weekly chart continues to push higher. They were up only 40 cents for the week, so not a whole lot of gain in here for the week. And the big takeaway on the semiconductors here is that we're getting some divergence on RSI. And so this move continues to be a little bit suspect. I mean, it's getting a little long in the tooth, this whole move that it's had since February. But it hasn't broken down yet either. So, again, it's one of those things where you got to wait to let price tell you that it really wants to come down. And Friday does look a little bit like a reversal type of candle, but right now, again, it hasn't broken down yet. All right, the next one we're going to take a look at is the home builders. Okay, so the home builders on a weekly chart was an inside down candle this week, down 93 cents, closing at $34.58. And again, the thing on the home builders, it hasn't taken out the August highs, and it hasn't taken out the highs from 2015 either. So, it's got a lot of work to do to keep pushing higher, and it's to be seen as to whether or not that's going to happen. Let's look at the daily chart. You can see we've got 2 consecutive closes below the 10-day exponential moving average. Sometimes when that starts like that, you start to get a breakdown. Now, it started to happen here, but it didn't break down. It didn't break the low of those 2 bars and start to roll over. So watching to see whether that happens now. We are getting bearish divergence on the RSI for this last move that occurred on the home builders. All right, let's take a look at the financials. Okay, here's the weekly chart of XLF, the financial ETF, and otherwise known as a rocket ship, as this has taken off and exploded since the election. Remember how it was consolidating, struggling to get it, kind of broke above this trend line, and then boom. And right now we were down, 39 cents for the week. We are pretty extended on this move. Let's take a look at the daily chart. It looks like a little bit of consolidation going on for the last week or so. Now, the real question is it going to start to break down or not, or is it just consolidating for another leg to the upside? Pretty significant divergence showing up in here on this move. We got very, very overbought, but a lot of times what happens when you get that overbought, especially with a reading like 90, now this is 10-day RSI, it just means it confirms the bullishness, how strong the move is. and it just keeps pushing and pushing and pushing, but it then creates, the bearish divergence, not confirming the move as it extends up here. So we could be ripe for a pullback. It just looks like that might be the case. So we'll just watch and see how it plays out and what kind of wave count we get. All right, that's the 3 key ETFs. What I want to do is go back and talk about the signal that I'm getting right now, the indicator that I've got. One of my key indicators is the put to call ratio on the CBOE, the Chicago Board of Options Exchange, and it's the equity put to call specifically. So what I do is I've been tracking this for over 10 years, and actually I've got data earlier than that, but what I've got built into my table is at least 10 years worth of data. And so right now, over the last year or so, been getting what we call level orange warning type thing. Actually, it's been occurring. We haven't gotten a level red since July 2014, when there's extreme bullishness going on. But this also indicates a level of extreme bullishness. And we're getting this, been getting this signal since December 7th. This is an indicator that I calculate every night, and it's the 10-day moving average of the put to call ratio. And I share this with my insider members every night. It's a part of the whole routine that I go through with all the indicators that I look at. And so right now, this is waving a flag. That's the way I look at it. It's saying caution, okay? It's saying caution. We could be in for a pullback of some kind. Now, that's what you never know is what you're really going to get. We got that for a few days back here in mid-August. We got the flag warning back here in early July. Now, notice we didn't get much of a pullback, but it was almost like it was a prelude to the one in August, and then we've got this couple-month pullback that happened. We had it back here in early June, prior to the whole Brexit fiasco that happened at the end of June. So those are some recent signals. Now, if you go back, we really didn't have any till, again, we get back into this, into late 2014, December. The flag was warning before this sharp pullback, okay? And in August into early September here before the sharp wave 4 pullback within intermediate wave 3. Now, this was the last reading back here in June, July. This was the last time we had a very extreme condition red type of indication out of this indicator. And it's really interesting that I find that that happened. And we had a series of signals before sell-offs in here, but it's very interesting that this kind of thing was happening and hasn't happened since minor wave 3. We were approaching the top of minor wave 3 in intermediate wave 3. And wave 3 is almost always the strongest of the 5-wave sequence that you have. And so the extreme bullishness is not surprising that you're getting the most extreme type of bullishness in a wave 3. So let's go back and look at, and really what I did was I then focused on that level red, condition red, I guess I'd call it, back early into the rest of the market data here in the S&P 500. And you can see we had it several times. And early on in this whole move from March 2009, you're going to get that because there's a lot of bullishness in launching the move. Now, look at this. Remember this whole government fiasco that happened in 2011 and the big crack that happened to the downside? Well, we were getting condition red, kind of a warning signal, several months in advance of it. What about over here at the top, back here in 2010? That was April 2010, and here was March of 2010 as a prelude to that, and this was the flash crash that happened in May of 2010. So we got a couple others too prior to little short-term pullbacks. And then here's the bottom in 2009. Now, if we go back into 2007, here was the peak. Here was the all-time high prior to the financial crisis. And we were getting a signal right at that very peak high there. Now, this was condition orange. Okay, this was not a condition red because this was in the latter stages of the bullish move from 2000. Was it 3 or 2? I think it might have been the low, might have been 2. I don't have it in front of me. and here's the peak in 2007. And so here's a series of condition oranges that we got. So the whole point is flags are waving right now, and this is what happened in the past, just to kind of give you an idea. And here's what's happening now. So that's why I'm got the mindset that said, okay, we need to be watching, looking for potential breakdowns now, because we've had a pretty significant move since November 8th, 7th, 8th, and the pretty significant move coming out of February also. All right, that's it for the weekend. Hope you found that helpful. If you did, please share it on social media and hit the like button. And if you're not watching this on my website, head over to the website and check out the other things, the post and the membership I've got for you over there. Again, this is the kind of stuff that my members are getting every day. Everyone have a great rest of the weekend, and we'll talk to you. Try to stay warm. It's getting cold here in Texas. We're supposed to get down to single-digit wind chills tonight. Wow. All right, talk to you on the next video.